Good morning. This is Jack Wolf. Again, thank you again for taking the time to attend this webinar. The webinar is going to be on closing the sale using the right words. I want to start by thanking again Stacy and the staff at the Kopoloff Agency for allowing this webinar to occur and for all the support that they've had over the years for this material. I want to start the presentation by assuming that everybody has the handout so that you can use it back as a reference and maybe take a couple notes during the course of the presentation. The presentation I really wanted to start with when we're talking about using words when you're making a presentation is the concept of airtime. Airtime is the amount of time that you talk and the amount of time that the client talks. And so what is the airtime that you use when you're making a presentation? Let's assume that you're attempting to get an appointment or you're past the appointment and you're actually at the call and you're in front of the client and maybe his family or maybe business partners, whatever the case may be. But the research basically says that based on research that has been done over the years, and these numbers have basically not moved, that 80% or more of the airtime or talking time is taken up by the agent or advisor, and 20% of the airtime or talking is taken up by the client. What's interesting about that statistic to me is that if you are absolutely taking up all the airtime and you're doing all of the talking, in most instances, which is the next comment there, you're probably making statements rather than asking questions. When you make statements, this is the situation as it relates to term insurance, or I want to talk about your existing policies, or whatever the topic that you're talking about, contingent beneficiaries. It doesn't matter what the topic is. But when you're making statements, you're not giving me, the client or the prospect, any airtime. When you start becoming a specialist in asking questions and understanding the power of questions, then what happens is that the questions breaks into dialogue, because you ask me a question and then you have to be quiet to get the response from me. When you start having dialogue is when I, as the client or the prospect, am going to start having more airtime. The issue for me is that how much time does it take to close a sale if you're doing all of the talking? When you're doing all of the talking at the point of sale, then what happens is in that monologue, you have no feel for the position that the client's taking, whether they're interested in what you're making as far as an approach, whether they're interested in the product or services that you're attempting to offer them, whether it's selling them insurance or financial advice or investment advice or whatever it is that you're doing there. But you have no feel for their interest or lack of, or whether or not you're on the right track or the wrong track when you're making statements. So under point number 1 on this handout, I want to make the comment that if you can, at the initial part of the interview, the suggestion that I have to know to manage the account, to manage the interview, and to manage the dialogue between you and that client or prospect is to start becoming a specialist in asking more questions. Questions creates dialogue. Questions creates data for you. Questions creates a way for you to get feedback on their interest level as you get into the topics. They may not have any interest in talking about life insurance. They may have interest in talking about investments. They may have interest in talking about a will. They may have interest in talking about spouse insurance or long-term disability or long-term care or critical illness or whatever it is. You would have no idea about what that is if you're into a monologue and making statements. So please be mindful of the fact that in order to get the interview going, until you start talking about your actual products and making recommendations, which is where you are going to have more airtime, I highly suggest that you become a specialist in questions. Stacy and the staff at the Kopoloff Agency have the top 25 insurance questions that you can ask a prospect or a client. They already have that intellectual property from me. And anytime that you need a copy of that handout, and if Stacy needs it again, we can get it for her, but I'm pretty sure she has it. And make sure that you get that from her, because in those questions, are some really good gems as far as starting to create dialogue with the prospect. A lot of it is about how they made the decisions to buy the insurance that they've already made, that they've already purchased. A lot of it is about, do they have sufficient coverage? Do they have any understanding from the prior agent that sold them that policy, whether or not they really truly understand what they have? There's a lot of questions around, do they have the right contingent beneficiaries? Do they have the right people covered? Do they have the right kind of coverage? Was there a conversation around the face amount? How did they make the decision to buy? How did they make the decision to buy the type of insurance that they bought? Lots of really good questions to create that dialogue and to give the client and the prospect the airtime that they need. It's critical that you understand that you have more, giving me, the client, more airtime gives you more information about my concerns. It gives you, the agent, much more information about my likes and dislikes concerning the prior agent. You've got to find out if that's a relative. You've got to find out whether or not it's a friend of the family. You've got to find out if there's some kind of tie to it. You've also got to find out things like, what's my health? You've got to find out things like, what's the health of possibly my spouse or a business partner or whatever. All of those things can be created by asking questions. Okay, under number 2 on a handout, it's about powerful words to avoid. It kind of sounds strange, I guess, when you look at that, the statement, powerful words to avoid, but they're not only words to avoid, but they're powerful words to avoid. When you use the words I, me, our, we, my, mine, and us, when you use those words, and I'll say them again slowly because some of you probably are taking them down. I and me, our and we, my, mine, and us. Those are what's called possessive words, the words that bring the conversation back to the speaker. So when you start a sentence as an agent with a client and say, well, I want to, you're talking about yourself, and you don't need to say the word I, because you're already talking. So what you want to do is not make an I or me kind of presentation. You do not want to talk about you, yourself, the agent, the advisor. What you want to do is start using the powerful words to use, and those powerful words are money, save, new, easy, of course the word love, discovery, results, health, proven, free, and guarantee. And of course, the last of those powerful words is the word you. So some of you who have heard some of my work in the past when I've made webinar presentations for Kopilov understand that there are agents and advisors out there that have I, me kinds of presentations. And then there are really good advanced advisors who do very well with their production because they make you and your kind of presentations. What's the difference? When I'm an I, me kind of personality, I keep talking and bringing the conversation back to myself. I want to talk about our policies, and I want to talk about my company that I represent, and I want to talk about the types of policies that I sell. You're bringing the conversation back to yourself, the agent, and you're not talking about the client. So what are the types of policies that you've purchased in the past? What were some of the conditions around the estate or financial planning decisions that you made in order to purchase that policy? What type of advice did you receive from your agent at that time? What were some of the decisions that you made around the types of insurance that you purchased? It's all about you. Then you can bring in the other powerful words like money and new and easy. When you make statements and you're using words to avoid, also when you make a statement like, well, this is a very complex illustration and it has a lot of numbers on it, and sometimes people get confused. So in one sentence, you said the words complex and confused. And you've basically, indirectly, given the client no chance to say whether or not they can understand complex financial information off of an illustration or not. I mean, they may have somebody in the insurance business in their family and you wouldn't know that. So when you use words like complex And those types of words in front of a client, you are setting that client up to believe that what you're about to say or show them in the form of an illustration, whether it's off of a laptop or a piece of paper, is very, very complex. And again, would you buy something that's too complex for you? Would you buy something that you don't understand? Would you buy something that's so confusing that you're not sure what you're buying? And that's the issue of using those kinds of words. So powerful words to avoid also, and this is another set of words, you really want to be avoiding the words don't and not. Put those words down. So don't do this and do not do that are words that when you put those into the brain, when you say that word, don't forget your homework, don't forget your scheduled meeting today, don't forget to call me back, don't forget to have an appointment, whatever. And when you use the words don't and not, believe it or not, the brain cannot process negative words. So when you say don't or not to me, like don't forget your homework or don't forget to stop at the grocery or whatever it is that you say, you basically have told that person to forget and do the opposite, because the brain cannot process negative words. So you also want to avoid the words don't and not, as well as words like complex and confusing, because what you're trying to do is get the client to be comfortable with you. You're trying to get the client to understand that it's going to be easy. Again, one of the 12 powerful words. And that they're going to be able to look at this new type of insurance or this new illustration. Again, a powerful word, new. And they're going to discover the ease at which they can understand the illustration. Discover, another word. So that they can create the wonderful financial results to satisfy and have the insurance that they need. So results is another powerful word. And again, proven. So these kinds of words, you can't use the word guarantee, obviously, in Quebec, and you can't use the words free. But what you want to do is start looking at these powerful words as a reference point so that when you start creating your talk track, and I want to, again, if you want to put down the term talk track, when you make a presentation and you are showing me an illustration, over time, you should get very comfortable with a specific kind of talk track. What's a talk track? A talk track is a way that you explain something as complex as an illustration, but you make it easy for me to understand. That's what a talk track is. You want to modify your talk track based on whether or not it's a personal lines case where it's a family situation or it's a business case, because I would assume that your talk track has to be a little bit more complex and a little bit more into the weeds as it relates to the product that you're advising them to purchase, and things like beneficiaries and ownership and tax consequences based on whether or not the client has an accountant or an attorney that you've got to co-present in front of that person, and whether or not you've got anybody technical with you helping you make this presentation. But what you want to do is make it so that your talk track is something that you become comfortable with and practice. And again, I'm making this offer that I do every presentation with a couple-off agency. If you want to have a conversation with me about your talk track and how you make a presentation, please understand that I make myself available to the advisors of the couple-off agency. It's important that you understand that if you're not being successful with your existing talk track, it needs to change. If you're not closing sales and your closing ratio is not 80 to 90% or above, then there's something going on with your talk track. Now, there may also be something going on with your prospecting and the kind of clients that you have, but quite frankly, your talk track may be the thing that's really deficient. So let's go on. So the powerful words to use are these 12 powerful words: you, money, save, new, easy, love, discovery, results, health, proven, guarantee, and free. But again, some of them you cannot use based on your license. But be very, very mindful that when you're using powerful words, you're waking up that client's brain. You're getting them to be more interested. Again, you've asked questions. So when you're asking questions, also see what they're saying and listen to what they're saying to see if they're using any powerful words, because that's going to give you a little bit of what their interests are. I want to stop here because I didn't put this into the handout, but I think it's an important point that I made earlier this morning when I was writing down my notes. There is research that says that when you're talking to me and I'm not involved in the presentation, because listening, if you were at the Kapoloff retreat, we actually did a listening skills test. Most average Western Canadian American listeners are not really very good listeners because they've got self-talk going on, they've got distractions, they've got people behind you that are walking around, if it's at a home or if it's at the office and they're seeing people walk by their office desk or whatever, and they have a lot of distractions going on. And so just make the assumption that people are not listening to you while you're talking. That's why you've got to ask questions. That's why you've got to create a dialogue, because you cannot make the assumption that somebody is listening. But here's the research. The research goes back into the late 1940s. After World War II, the United States government created an organization called the National Training Labs, and they were based in Washington, D.C. And they, in 1948 and 49, started creating research. What do people remember when the only thing that they were asked to do was listen? It's an interesting question. And the research says that within 48 hours of listening to you talk, and this is your children, this is your spouse, this is people in your life, what you remember is less than 5% of what was said to you. Now, that's a horribly low statistic. Think about that for a second. You say something to me, and 48 hours later, I remember 5% of what you said. That's the research. Now, there's another piece to this research. If you get the client involved and you get them doing something, they take a highlighter and they start highlighting along with you the illustration. What do they highlight on the illustration? The copy that they get to keep. They highlight their name. They highlight their insurance age. They highlight the face amount. They highlight whether it's term or universal life or whatever, second to die, or whatever kind of policy that you're attempting to market to them. But now you've got me involved in your presentation. I'm actually doing something. Here's the research. If you have me do something, whether it's taking notes or whatever it is, you get me involved, asking questions where I've got to say something. There's a retention level that jumps up to 45%. So now I remember almost half of what you said because you got me involved in your presentation. And so that's what's so critical about this presentation and understanding the brain and how people retain things and why people remember and why people forget. When you get me involved in your presentation, you have a 9 times more chance of me retaining it. Why is that important? If I retain 45% of what you said versus 5% of me just listening to you babble on, then what happens is that I'm going to be able to explain this better to my wife or to my business partners or to my husband or whatever the situation is. But you want me to remember the words that you said because they're important words. Words about the illustration and words about the face amount and how you came to that conclusion, and words about the premiums and words about the type of policy and words about the beneficiary and the contingent beneficiary and the ownership of the policy and the tax consequences. There's lots for me to remember. But if I don't get involved in the presentation, then I'm not going to have this retention level. So you're jumping my retention level from 5% to 45% by getting me to do something during your presentation. And doing can be as simple as responding to a question. It could be as simple as me making notes for something either on a pad or on the illustration itself. Okay, number 4. This is a repeat, but I think it's really important. Under using, you put the word I there, or, and put the word you. So using I or you as a salesperson. If you talk to the successful people that go to $1 Million Round Table on top of the table, they will absolutely tell you that the greatest gift that they ever gave themselves to get into top producing is that they absolutely became experts at asking questions. They became experts at dialogue. They didn't just become experts in policy, understanding the different types of insurance. They didn't just become product experts. They didn't just become technical experts. They became experts in relationships. They became experts in knowing when the client has interest and when the client's interest is waning and the client is losing interest in the way that you're presenting. They became experts in understanding the hot buttons and how the client makes decisions because they asked questions like, what were the circumstances under which you bought these other policies? Have any of those conditions changed since you've bought this insurance? Who was the agent that sold you these policies? What was that relationship like? Do you understand the types of insurance that you've purchased here? If you literally ask those kinds of questions, you will discover that a lot of clients, when you make a you type of presentation, which is a focus on the client, when you're making that you presentation, it's called an external focus. It's a focus on them, not yourself. When you're focusing on others, whether it's your children, your spouse, people that you work with anywhere in your life, when you have a you or external focus, you're going to involve them in your relationship and you're going to have a much easier chance of closing that sale because it's going to allow you to have a clear understanding because you're going to be asking questions and getting dialogue and having them be involved and increasing their retention level from 5% to 45%. And that's the difference between an I salesperson and a you salesperson. And it can also be the difference between an I and a you as it relates to being a parent or being a spouse. What type of person are you? Are you ready to shift into periodically, or maybe most of the time, becoming a you type person? And you know those kinds of people. The people that have an external focus. You totally feel drawn into those kinds of people. Those people with a you focus, you like to hang around because you feel wanted. You feel that they are concerned about you. You feel that they are interested in what you have to say. You get this impression that they absolutely actively listen to when you're talking. That's what a you type person does. They engender that type of relationship where it gets to a real deep level very, very quickly because the external focus on others makes other people just want to be around you. When you walk into a presentation and you continually talk about I, and my policies and the kinds of insurance I sell, and you look like a person that needs whole life or universal or whatever, and these policies that you bought are crap, and boy, that agent really did you a disservice, and all the things that you can make a mistake doing, then what you want to do is you want to just turn that around and flip that around to a you kind of presentation. Okay, number 5, absolute language. It's a new term that I don't think that anybody that's ever seen any of my presentations has ever heard me say. What's absolute language? Absolute language, if you want to write these words down, are always and never. Absolute language means that there's no variance. You can't have it any other way. Always and never. So we always do this, and we never do that. The moment that you say always and never, absolute words, to a very, very strong type personality, the first thing that that strong personality is going to do internally inside their own brain is they're going to start looking in their mind for the exceptions. Well, that's not always the truth, or that's not always the situation, or you never say this, or the agent didn't ever do that. So the moment that you say words like always and never, absolute words, be very mindful that especially a strong kind of person with a strong personality and a quick mind is going to start looking for exceptions in their own mind. And you've lost a lot of credibility when you do that. I also would highly suggest to practice always and never about eliminating them from your dialogue, especially around family situations. You can get into a lot of trouble, and I'm hoping that the men are smiling when I say this, when you say to your wife, oh, are you always? And the moment that you do that, you're in trouble, and you know that you are. And because when you say that, you're not giving any wiggle room. There are no exceptions. And the bad news about that is that the no exception problem is going to be getting you in trouble when you say always and never. So I've had agents that have actually had problems when they say that there's never been a problem with an insurance company as it relates to their financials. There's never been. Well, there has been. In the United States, there's been a couple companies that have actually gone out of business, and the insurance industry has had to take over their policies until they could get a holding company or a new insurance company to take service of those policies. So even in the United States, there were companies that were pretty large companies. One was based in Buffalo, New York, near Canada. And in Buffalo, New York, they had a problem with an insurance company that really went bankrupt because they paid too much in interest on their annuities and their universal life policies. And they got in financial difficulty, and the insurance commissioner of the state of New York shut them down. And they literally were in limbo. The policyholders, there were no claims that were paid, nothing. It was about 6 months. And then the insurance lobby and industry split up all their policies amongst 3 or 4 companies. So when I hear people start using words like never and always, I know that the really smart, quick people are really going to take, they're going to have a problem with those words, because always and never occur. Ooh, I just had a pun there. Okay, number 6, the word but. Put next to the word but the word and, A-N-D. What you want to start doing is, instead of using the word but, because when you make a statement and then you use the word but, everything that came before the word but gets eliminated as far as my thinking in my brain. What you want to do is transition. It's called a bridge word. When you transition from the word but to the word and I think that this type of policy, and I think this type of coverage, and I've noticed in the past that people that have this kind of beneficiary or this kind of insurance or whatever it is that you're speaking of, start using the word and. It can be an immediate and equal substitute. What the word and does is it takes my brain and just allows me to continue to think. When you use the word but, you're basically saying to me, the receiver of the word, if you say but to me, then what happens in my brain is, whatever you just said before the word but is not as important as the words that you're about to say. So what you don't want to do is say the word but, thinking that I'm going to take and remember all of the words before the word but. You want to use the word and. It's a bridge or transition word. And I think that you can do this, and I think you can do that. Number 7, big opening words. Be very, very mindful when you open up a presentation, whether it's on the phone, whether it's an email, or whether you're in person with someone, that you've got to hit the road running, and you've got to hit with energy. There are so many people, it's called the law of first and last. In the psychology world, it's called the law of primacy and recency. It's the first and the last experience that I have of you. Good morning. See, that's different than hi. Hear the difference in the energy. So your big opening words, it's not only just the words that you say, but it's the other part of the word, which is the how you say the words, the energy that you say it. So what are big opening words? Big opening words are words that just not only give a greeting, but give me comfort that you're not going to be too pushy. You're going to listen to me. You're also going to be giving me big opening words where you're going to give me an outline or an agenda for the presentation. So under big opening words, put the word agenda. Why are we here? Why are we having this meeting? What do you want to accomplish during the meeting? What do I want to accomplish and get from you as the prospect or the client? Let's assume it's the first interface. It's the first meeting between an advisor and a prospect. They're not a client yet. They haven't bought from you. Until they buy, they're not a client. They're a prospect. And you're meeting with me. So your big opening is you're greeting that person. Then you're setting the stage for the amount of time potentially. The top producers will tell you that they absolutely say, in the next half hour, you will be able to get enough information about this insurance and about these situations and your coverage that you'll be able to make a decision. What are they doing? They're setting a time frame. They're setting up a standard that this is the agenda, This is how long we're going to be together, and you're going to be able to start making really good, solid decisions based on a lot of information. And during the course of the presentation and during the course of our meeting, I'm going to be asking you some questions to get some information from you that is going to help me guide you to make the right decision for you. Notice how this keeps going back to you. So what are you doing with the big opening? The big opening is absolutely setting the agenda, setting the tone, saying that you're going to ask questions. Also, what you want to do in your big opening is make a statement such as, if you feel that there are areas that are going to be areas that you have questions about, then what you want to do is please just know that we should stop the presentation, stop our dialogue, and just please let's get those questions out so that we can just have you be able to stay during the course of the presentation so that you're going to be able to understand as we go toward the end of making decisions. And what happens there is that you want to set it up so that questions are absolutely relevant, questions are wanted, questions are something that's going to help the presentation, and questions are going to be something that I can feel comfortable asking you about. So if you get onto a roll and you've got 80 to 90% of the talk time, that air time that we talked about under number 1, then you're probably not going to give me any space for asking questions. So that's what the big opening is. What's the closing words? Big closing words are words like decision, words like additional information, words like what is it that you need from me that can help you make this decision. If you go all the way back to Ben Feldman into the 50s and 60s, he very much stressed opening and closing. What are the words that you're using? What's the vocabulary? What are the powerful closing words that's going to get this presentation from the talk phase to making decisions where you're actually getting an app and you're getting an application out? So what are those words, those triggers? The other thing that you've got to do is use words like additional. Is there additional information that you need in order to make a decision? Or you could ask it more directly. Are you ready to make a decision? So, and again, when you ask those kinds of questions, especially with powerful, aggressive people, put down the word choices. Always give a client choices. So, do you think that you need the $250,000 policy or the $400,000 policy? Do you think you need the $150,000 or the $300,000? Whatever it is, either one of those you win as the advisor. But quite frankly, going forward, what you want to do is have the close where you're absolutely getting to making decisions. Because again, one of the issues that I find with a lot of advisors who are stuck in their production levels, they're not good at opening, they're not good at asking questions, and they're not good at closing. When you have a client that's ready to close them. There is the term talking past the close. Why do you continue to talk? When's the time to ask the question, are you ready to make a decision? Is there any additional information that you need to make a decision at this time? When you start asking those kinds of questions, you're actually doing a trial close to see if they're ready. You're also asking the question, what type of information, what type of data do you need in order to help you make this decision? And then you've got to be prepared. I made this recommendation at the last webinar that we did a couple months ago. But go to mdrt.org, which is $1 Million Roundtable, mdrt.org, and in their library of resources, they actually have multiple books and CDs and all kinds of things on the term objections. You can practice overcoming objections. It's almost like a mini class on overcoming objections. You ask your trial close question, is there any additional information that you need in order to make a decision to buy this insurance today? And they give you whatever the objection is. I got to talk to my wife. I got to talk to my accountant. I've got to talk to my business partners. I've got to decide whether or not I can afford this. Whatever it is, it's going to be complex. I've got to talk to the other agent as far as my existing insurance. Those kinds of things are things that you should be able to practice. The reason that you want to practice objections is because then, based on the statement that the client has, that you're ready to start negotiating the close because you've already practiced that close. You've already practiced overcoming that objection. But if you're not ready to practice and you get stymied by that same statement, case after case after case, then make sure that you get some assistance in overcoming these objections. Because getting past the big closing words, the most important issue is, what is it that gets that client into the decision-making mode? What gets that client into making the decision to buy? It's so critical that you understand going forward, if the client's ready, the client's ready. And if they're not, you've got to discover the whys they're not. What are the things that are the inhibitors? What are the barriers? Is it financial? Is it emotional? Is it the other agent is, still tied to them, and you're not going to be able to bump that other agent out? Is it that they don't even want insurance right now, but they want to talk about investments? What is it that you didn't discover? So when you get to this objection phase, when you're getting to the big close, practice it. Get a peer, get somebody, contact me, it doesn't matter. Whatever you need, get somebody from a head office to help you, a field rep, whatever it is that you need. If you've got a large case, get some help. The largest case that I ever dealt with when I was still in production, I got a lawyer from the head office to come with me, and I made 2 different presentations. I made a presentation to the partner brothers, and they passed me on to their attorney and their accountant. And in both of those presentations, I was not sitting there alone. I had a tax lawyer with me from the head office who was a product expert, but he was also a lawyer. And it really helped a lot as it related to the tax questions and the ownership. We stopped talking about the insurance. We started talking about the technical parts of the policies. Who was going to own them? Who was going to be the beneficiary? How was it going to be paid? Can we make these premiums deductible or not? What happens if the corporation pays them? What's the tax consequence to the insured employee? All of those questions meant that I was further down the line with this case. We weren't talking about premiums anymore. We were talking about the technical parts of the policy. Can you get past the cost of the insurance and start talking in your big close about what the insurance does? What does having $250,000 of tax-free cash do for your family? What does it do for your peace of mind? Death is not an if, it's a when. I used that statement. I started using that in the 1970s. Death is not an if, it's a when. So it's when you die. So if you have a magical formula to know when you're going to die, then you may not even need insurance. But since nobody around here seems to know the when anybody's going to die, and God forbid it's your time, then that's why you need insurance. That's why 9 out of 10 people have some type of insurance in addition to the group insurance that they have at work. That's why 9 out of 10 people have made that decision to buy a product because they don't know the when. Not an if, it's a when. Number 9, what are the client's words? So here I want to flip this whole presentation, and I want you to start thinking about, are you even aware of the words or language or vocabulary that the client uses? What have they been using during the course of your presentation when they do talk? So what's their vocabulary like? Have they focused on their family? Have they focused on the continuation of their business? Have they focused on education of their children? What is it that they've been saying? And are you listening? Are you listening to what they say? What words are they saying? What buckets of importance do they have as it relates to having insurance? Because insurance to me is just tax-free cash. What are you going to do with the insurance? It's going to be a very selfless purchase. It's going to be something that they're not going to see because they're going to be deceased. It's going to be something that's going to go forward, and they're going to basically give as a benefit to their family or their business partners or whomever. But it's so critical to understand the words that they've been saying. Be very mindful that they've been giving you hints all along with the words that they've been saying. The question is, have you been listening? I also want to say something else here under number 9. When you're listening to the client, what's the pace at which they talk? What's the volume of their voice? What's their tone and intensity? So when you're speaking, what you want to do, it's called mirroring and matching. What you want to do is you want to get at the same pace that your prospect or client is speaking at. If they talk slower than you, slow down. If they talk faster than you, speed up. What's their intensity level? Are they the kind of A-type personality that they just, okay, get to the bottom line? What's the situation? I'm not happy with my current agent, and I think I need $500,000 of coverage. Now we just have to decide what kind of coverage we're going to get. I mean, I've actually had clients say that. I'm not happy with my advisor. My accountant has told me to change. I need somebody that's technically more competent. And that's what I always sold. I walked into a case and I said, I'm an MBA and I'm a COU. And I'm here as an insurance professional to help you so that you can make really good, solid, intelligent decisions about the types of coverage that you need that's going to benefit, the types of coverages that you need as far as having this tax-free cash to benefit family, business ownership, whatever it is that you need. But the stress was always on listening to the clients, listening to what their interests are. What is the reason that they need cash at death for? Because basically that's what insurance is. Now, there have been some very successful advisors over the years that have sold an awful lot of whole life insurance and sold it as a living benefit because of the return of the cash value. One of the largest cases in the history of the United States, it was over $1.5 million premium, which was a set of executive life insurance policies on the executives at General Motors in Detroit. And it got actually into a magazine in the U.S. called The National Underwriter. And the agent that sold that case basically never talked about the death benefit. What the agent talked about was the accumulation of cash value and the fact that when for every $10,000 of premium, there was over $8,000 of cash value increase every year. And he sold basically participating whole life insurance, and he had dividends in there. And the combination of cash value increase and dividends gave that policy almost an 80% return on cash. So when the client lived, the insured lived to 65 as an executive for General Motors, then General Motors could cash that policy back in as key man insurance and get 80% of that back and then pay that back out as deferred compensation to the executive. And that's how that case was sold. It was sold as a living benefit, cash value, return of premium basically of 80% or above, so that the corporate, and if the insured executive died, plane accident, God forbid, or health situation, then the corporation had the death benefit to pay out to the widow or the trust or the estate or whatever the setup was going to be for each individual. But think about $1.5 million of insurance premiums, basically with the idea of selling it as a living benefit. So that agent had to listen to what was going on there. So are you listening is question number 9. Are you listening to the words? Are you listening to the needs? Are you listening to what they're interested in? And then what you want to do is listen to the tone and pause. What you want to do is listen to the pace that the client is speaking in. It's so critical to understand that. Okay, number 10. There's just 4 words there, I, you, we, and all. And what do they mean? What you want to do with I, you, we, and all is understand that you are the I, the advisor, the agent. You're the I person in this presentation. You have expertise, you have policy knowledge, you have technical knowledge, and you have some modicum of sales or relationship skills. And I intertwine sales and relationship skills. The you in this situation is the prospect or the client. You've got to get off of your I and stop talking about yourself and your policies and the insurance companies that you represent and start talking about you. What are your needs? What are the kinds of insurance decisions that you've made in the past? What do you have as current circumstances? What has changed in your life since the last time you bought insurance? So forth and so on. So that's the you. It's the external focus. Once you have an I and a you, and you focus on both, because you still need to close, you still need to make a living selling insurance. Once you have an I and a you focus, you can start creating a we. What's the we? A we is the It's the joining together of a solid agent who understands the needs that they have and the needs of the you or the client or the prospect. And that blends into a solid we. So I use the I, you, and the we when I talk about parenting skills or sales management. The sales manager, whoever that is, needs to understand that they've got needs of production. They've got to have so much premium going into the head office every year. And then they've got to take care of their advisors and make sure that they get all the support that they need. And that's when you start creating we. A we relationship means that it's a solid give and take relationship where both people feel that their needs are being met and the needs of others are being met. You do not have a good solid we with a client if you don't have a focus on the client. And if you read anything that's out there that's current as it relates to customer service or anything, the most successful companies that are doing excellent customer service, that's all their training is about. It's all about our company and our products and services and making sure that our customers are happy. And that's how we create a solid we. The all in this circumstance is all the other circumstances that relate to making the decision. The all could be the advisory team for the client. If he or she is a doctor or a business owner, a car dealer, a dentist, whatever, that all team are the people that you've got to get involved. You've got to get everybody in that all team on the same page with you and the client. Because if the accountant is not happy, if the lawyer is not happy, if the tax advisor, if the investment advisor, whoever's managing their portfolio, whatever it is, because you may be taking money out of their portfolio to pay the premiums. And if you don't ask those kinds of questions, where is the money going to come from to pay this premium? I used to ask those kinds of questions. Do we want to have the corporation pay, or are you going to pay with after-tax dollars? Do we want to get a bonus from the corporation so you're only paying the income taxes on the premium? There's lots of ways to have these conversations. But when you have these solid conversations, you have to get everybody involved that's an advisor to that client. I also want to add that so many cases in the personal lines market, the under $5,000 or $1,000 premium case, where it's a personal family situation, the person's not a business owner, they're an employee of someone else. The decision maker in that family group, may not be the person that you're talking to. It truly may be the spouse. It may be another decision maker that you're not aware of. And when you start going into the big closing words and you start asking, is there any additional information that you need? Then there may be someone else that helps you. Is there anyone else that helps you make these decisions? Is there anyone else that we need to bring into this conversation tonight? Ask those kinds of questions. Why would you ever want to take out an app and start getting an application and have the client go, or the prospect go, whoa, I can't make this decision. I've got to talk to whoever, brother-in-law that's an accountant, or my wife's sister who's a financial advisor at one of the big stock brokerage firms, or my son who's a banker at the TD Bank, or whatever it is, or BOM or wherever. So all of those situations create the all that makes the client help them make that decision. And that's what the all is. So I'm going to bring this off of mute in a second, but I want to hopefully have you understand that when you start talking about the words that you're using in your presentation, if the words that you've been using up to now have not been successful, if you have not customized your presentation to the type of market that you're making the presentation in, if it's a personal line market, it's another set of words. If it's a business owner or a professional or someone that's going to have other advisors, then it's another set of words. And be very, very mindful to use the words that the client's using. So let's go back in here. We're going to unmute this, and we're going to have anybody that's ready to ask questions.
That was great, Jack. Thank you.
Comment, feedback.
It was great, Jack. Thank you. I just want to the number 10 on the handout. I have I, you, we, and close.
Yep, I have I, you, we, and all. Valerie got cute with that when she sent you the closed one. Mine is IUE and all.
Okay, so everyone has closed. Anyhow, it doesn't really matter. I just wanted to.
No. Well, here's what matters though, Stace, which is a great question. I thank you for bringing it up because we're still taping. When you have IUE, if you don't create a solid we with that prospect, then you're not going to close. So I hope that that's what's understood. A lot of agents will start making a trial close and get out an app when they never created a we. They never got the client to say what their objections are. They never got the client. They never understood what was going on in the client's mind. They never understood who the true decision makers were. They didn't understand their budget. They didn't understand the type. If the illustration, they still don't understand it. That's the issue. Until you create a we with that prospect or that client, you're never going to close.
Do you have the list of the 25 questions?
I'll have to look. I'll take it. Yeah, those 25 questions, Jack. I probably have them. I'll take a look. If not, I'll ask you to.
You'll send me an email. I'll send it to you.
Yeah, and I'll send them to everyone who.
We have the questions specifically for the insurance industry for life insurance. Absolutely. And
Jack.
Yes.
Steve Parsons. Steve Parsons. I just wonder if the Lightning are going to win.
I don't think we can take this. I'm very sad last night. It was 3-0. I watched obviously I watched all the games, but I